Welcome back. You're still tuned in to Salam Media. The time is 7 minutes past 9. In this hour of news and views is sponsored by Africa Muslims Agency. Africa Muslims Agency, a beacon of hope to communities for over 35 years in Africa and beyond. And in a bit, we'll be shedding an eye on South Africa's economic rebound, if you can call it that. It has been recorded that South Africa's GDP grew by 0.4%. In the second quarter, and we'll be joined by economist Reezwana Sumad, who'll be giving us insight on whether or not this is something that's positive, something that should be celebrated, and what's behind the 0.4 GDP growth, and how can you and me, the people on the ground, interact with that information? Does it affect our daily lives in any way possible? Reezwana Sumad is joining us virtually. Reezwana, assalamu alaikum. Thank you so much for giving us your time. Welcome to Salam Media.
Wa alaikum salam. Jazakallah for having me. Salam to the listeners.
I mean, I think, first and foremost, we've gotten news from Stats SA that our GDP expanded by 0.4% in the second quarter. In literal terms, what does this mean? And what is the driver of the 0.4%? And is it something that should be celebrated?
Definitely, if you look at the first quarter of the year, the first quarter was very weak. Initially, we had seen a contraction, a decline in growth in the first quarter. In the second quarter, we had seen growth of 0.4%. And what was also positive was that first quarter growth was revised to 0%. So no longer a contraction, just flat GDP in the first quarter. It is definitely positive because it does indicate that the economy is growing as opposed to remaining stagnant, but the growth rate is still too low, and we're seeing a bit of a better pickup in growth in the fourth quarter of this year. I can expand on some of the industries that contributed towards that better growth forecast. So what was very positive in the second quarter of the year is we've seen households' consumption spending. So consumers really going out and spending on all types of goods and services across the board, from food, beverages, accommodation, business services, personal services, on jewelry, on other discretionary products, and that has been the major driver of GDP growth in the second quarter of the year, really driven by consumer spending. But in the industries that captured this spending, this was concentrated in the financial services and business industries. In manufacturing, we did see a sharp increase and recovery in manufacturing production because of no load shedding in the second quarter, which allowed our big factories to operate on a more consistent basis. But we also seen various other industries grow in the second quarter. Electricity, so the utilities industries expanding because of more electricity being produced, as well as wholesale and retail trade. So the wholesale and retail trade really picking up that consumer spending that happened in the second quarter. So those are some of the key drivers of the growth in the second quarter. But I must also say that out of the 10 industries, 7 industries grew, but 3 industries contracted. So our agricultural industry contracted, mining industry contracted, as well as transport and logistics contracting in the second quarter.
This 0.4% growth in layman's terms, for ordinary South Africans, on the ground, the average working men and women of this country, what does it mean for them? Does it mean food prices will go down? Does it mean fuel prices will go down, as we've been seeing? How should they be interacting with this announcement?
I think first and foremost, growth is very relevant to the average South African in terms of how much employment it can create. So in the second quarter, what we did see is we saw a sharp influx of people into the working force. So more people coming into the labor market looking for jobs. And because of that sharp increase in supply, we saw an increase in the unemployment rate because the economy could not, absorb that supply of labor. And so the unemployment rate in the second quarter rose quite sharply. If we get higher levels of economic growth, certainly this would enable the economy to absorb more labor. 0.4% growth is still too low for that to happen. But over the next few quarters, like I said, we're expecting growth to pick up even further, and that to help, ordinary South Africans from an employment perspective. Higher levels of economic growth is also positive for labor in the fact that earnings could pick up, and I think that would also be quite positive, more so into 2025 rather than in the current year. I think what is quite important for South Africans right now is that the economy isn't contracting. I know that is a very low bar for growth, but I think the worst case scenario would be GDP contracting, and that having even more dire consequences for the labor market. So the economy is growing, not as as hot as we would like it to, but it is not contracting, and I think that is the key, I think, positive message that should be communicated.
Stats SA mentioned that the 3.1% growth in the electricity sector is the sharpest increase since 2008. What does this tell us about the sector's recovery and its role in the broader economy? I think electricity and Eskom in the last 3-4 years has been in the headlines for all the wrong reasons, and we seem to have some positive results coming out of that.
Yeah, so we're now entering the 6th month without load shedding, so without actual implemented load shedding. This is quite positive. The electricity or the utilities industry as a whole is very small in terms of its contribution to GDP growth, but it acts as a facilitator for business activity. And we saw that because one of the major reasons why the manufacturing industry was able to grow in the second quarter was because of the more electricity supply or electricity certainty that we had in the second quarter. Whether this is sustainable or not, I think is a key uncertainty. We at Nedbank CIB do believe that load shedding will end almost completely by the second half of next year. So that is quite positive. But I think the important point that you make is that we've had load shedding since around 2008. And in the last 2 years, it's become significantly worse. And what we've seen is actually companies closed down because of them being incapable of operating with higher levels of load shedding. So we've lost some capacity in the economy because of load shedding that will take some time to rebuild. Now, companies are not going to reopen, within the next 6 months. It's going to take some time to get funding for that. And I think that if we are likely to see electricity certainty and load shedding levels remain very low, we could see that capacity begin to grow and come back into the economy. It's just going to take, like everything, it's just going to take some time.
And reading on this, a lot of people are quoting the formation of the government of national unity, the quote-unquote GNU, and the new cabinet. How do you think the formation thereof has affected economic prospects of South Africa, and just generally the role that political stability plays in economic growth?
It does play a significant role in longer term growth. What we saw after the election, what we saw in fact before the elections, was that businesses there was some trepidation. They were unwilling to invest and expand investments. One key negative that came out from this GDP print was gross fixed capital formation. So that's just a short form for investment spending. That continued to decline in the second quarter. In fact, it's declined for the last 4 quarters up until Q2 of this year. And that is very negative, but that captures business sentiment. And that, remember, that was before the new cabinet was announced, right? Second quarter of this year. So we see some trepidation in the second quarter because of political uncertainty. But what we've seen now in the third quarter after the announcement of cabinet, we've seen business confidence tick up. We hopefully will see some more investment spending take place in the third quarter of this year, and we've seen to some extent a sharp increase in new sales orders in the month of July in particular. There are signs that the elections and then the announcement of the new cabinet and more political certainty have resulted in better business sentiment and consumer sentiment, and that will likely drive investment spending in the third and fourth quarters of this year. The one thing that I should also mention in the second quarter, I mentioned that consumer spending increased quite sharply in the second quarter. One of the key reasons for this is lower inflation. So we've seen inflation, particularly food inflation, come down quite sharply in the second quarter of this year, and that has given consumers space to spend more because of lower inflation and more stable prices in other goods and services. So that has been key help for the SA consumer in the second quarter. We are expecting inflation to continue to ease in the next few quarters, and that will continue to help consumers in terms of their discretionary spending.
And is this something that from the projections, is this a trajectory that you see South Africa taking in the next few years? You mentioned one of the key positives being that projection of load shedding being completely over by the second quarter of next year. Is this going
Second
to
half.
see? Yes. Is this something that you see, being almost the norm, where we're seeing significant economic growth in the country based on the fact that there's stable electricity coming in?
But we don't just need stable electricity, right? That's just one of the plugs, for business. We need more stable water supply, very important for factories and manufacturing industry. We need better infrastructure or better maintenance of infrastructure, and very important for importers and exporters, we need Transnet operating more efficiently. So our railway lines and our ports, more importantly, operating better. So we seem to have resolved our electricity problem or electricity crisis that we have been dealing with for a number of years. And now government's attention has been turned towards resolving issues within Transnet and upgrading bulk water infrastructure. Now, even with that, that's not going to happen overnight or over the next 6 months. It's going to take between 12 and 18 months, so 1 to 1.5 years, to really see the fruits of that, maintenance and upgrades and improvements. So I would say electricity is just one aspect that could, boost economic growth, but we need the other areas of the economy operating better to be able to catalyze South Africa onto a higher growth rate. Our forecast for this year, we're seeing growth of 1.2% this year and 1.4% next year. There are upside risks, we think, to this growth estimates. But remember, 1.4% growth when countries like India is growing at 5%, Brazil, Mexico, other Latin American countries who are our direct peers and competitors are growing well above South Africa's growth rate. It's still really not enough, but like I said, it's better than what we've had over the last 5 years.
All right. Unfortunately, we have run out of time. Reezwana, thank you so much for that very, very inclusive insight into South Africa's economic turnaround. Reezwana Sumad, Senior Research Analyst at Nedbank CIB. I think you and I will be chatting more often as you unbreak this very, very complicated economic, jargon that a lot of, South Africans don't seem to understand. But we're going to leave it here for now. Really appreciate it.
Jazakallah for having me. Assalamu alaikum.
I mean, Reezwana Sumad there. Yeah, I think something positive, something to celebrate. We have some comments coming in from Facebook. Some of you want to interact with us. Mastura Daurai. No load shedding, but price per unit rise ridiculously irrespective of low consumption on pensioners. And I think that's an issue that needs to be looked at quite carefully. And we'll definitely be chatting to Eskom and other stakeholders regarding that, the issue of high electricity prices in comparison to the previous years. And then we also have James Connell, who says, give Ramaphosa and GNU credit. They are working significantly hard. They're working significantly hard. Only the best from now and onwards. So yeah, thank you so much for interacting with us. It's really great hearing your comments and what you have to say regarding some of the interviews that we're having. Going to take a quick break. Going to come back. We'll be speaking to Chad Thomas, organized crime expert, about extortion and racketeering, which is seemingly getting out of control here in South Africa. More on that after this.